If you do have time this week, jump into the live room. We do awesome work. If you have a quick question, if you need to defend something, if you want to propose an idea, we are there 10 hours a day, 9 to 10 hours a day. Pop into the live room. You have the link delivered with this video. Speaking of video, before I forget, also barely 20% of you engage with the video and give it a like. So if you don't like the video, that's fine. Just let me know what you don't like about it in order to make it better. And subscribe to the YouTube channel if you're not already, and hit the notification bell. I really appreciate it. We do try it hard. Good evening, everyone. Getting ready for the week ending 10/24. So we're looking at the VIX. I'm starting here because last week was monthly expiration, and it did not disappoint with regards to drama, and this is the mathematical way we represent drama. The VIX spiked. The options market makers started demanding more for the options they're selling for a month out, so they were concerned. To be honest, the spike matched levels from April and May. So I'll start with the tangibles. The easiest tangible is this one, which is a picture of the SPX this far out in order to show you how we're touching the trend in order to test it. The Friday from 2 Fridays ago, the 10th, we had this dip. Reminder that before the dip on Friday, we broke records at some levels. So this was an all-time high. So a drop of 4%, albeit was violent, it wasn't very scary. And the weird thing is, this is where the weirdness of the VIX starts, is that right here, the VIX was much higher than here. So what are we doing? We are buying dips and trying to make higher high. Last week, there were extremely strong buy the dip moments where the rallies intraday were phenomenal, but they started from the hole. It seems like that was the story last week. I'll summarize the tangibles into one statement. Plus or minus 2%, that's where the battle is. And if you want to be granular about it, the bears need to lose 1.7 in order to test that 10th, and the bulls can make a new high with as little as 1.5% move. We do have some things to watch for this week. I want to go back to the intangibles for a moment and discuss this idea. The last time the VIX was 30 in April, Microsoft was somewhere around 350 to 370. Okay, so now the VIX hit 30 on Friday and Microsoft was 514. So those two things don't make intuitive sense. They cannot both be correct. So something, and the important part is that nothing new happened to Microsoft. Nothing good, nothing bad. So I'll jump into what's going to move markets this week. It should be only about earnings, right? After all, I highlighted a few that might be interesting. First of all, Netflix on Tuesday, IBM and Tesla, of course, Intel and Newmont, of course, Ford maybe. Other than earnings, we do have some inflation numbers. They promise us, even though the government is closed, they might deliver some inflation numbers. I believe they're slated to be at the later parts of the week, Thursday and Friday. In addition, we have two lingering headlines that may hit us and may not. One is the government shutdown. When will they reopen? And two is the deal with the tariff. Are they going to kick the can? Do we have a date coming up? I honestly lost track. I don't know if there's one reliable source where we can say, here are the deadlines for the tariffs that are coming, other than the tweets that come out here and there. Let's jump into the S&P levels discussion, specifically on the SPX. On 10/10, that was 2 Fridays ago, we fell 4%, 210 points. We are, as of this moment, 105 points above that. So we're right smack dab in the middle. We have had one test of the floor, so that makes it imperative to hold. 6550 zone, and we have had multiple attempts at a breakout or recovering the Friday. Immediate lines for Monday, I would look at 6595. Will it hold? Versus the resistance that is persistent as we approach 6710 and 20. The NASDAQ, the QQQ, is in better shape than the S&P from how close it is to the highs versus the lows. You can see how the floor is much further lower. So the mega caps will be influenced by Netflix. So, and here's the important. So let's assume Netflix breaks out. It is very easy to expect that these guys can carry to 620, the QQQ. So I wouldn't be too short without hedges. I wouldn't be too long without hedges. Immediate support is very clear. They don't want to lose 590. And the small caps is the champion. They made an all-time high after the correction of 1010. You can see how much higher, but now they reverted lower than 1010. So 240 IWM is important to defend, and so is the gap at 237. If you get to 237, then there'll be a risk of carry forward lower to 233. Folks, I will see you in the live room.